Hey, we finally made it to GAC 5s. Whew, I'm still about, I don't know, 6 videos behind, but I'll try and catch up a little bit. I don't even remember what I was saying in the last video because I stopped to upload those first 2 videos and I watched Lucifer and something very interesting happened. No spoiler alerts. So, I think I was talking about the market. I don't even fucking know, honestly. Um, we're a little bit less than 10% off of, well, the highs, recent highs, in some instances all-time highs. I don't think we're going to go right back to it. I think we might go back to that 2 steps forward, 1 step back thing that we did earlier in the spring. Congress needs to get their heads out of their asses, put another stimulus bill on the table. The election's going to make a difference. This continued reopening and infection rates are going to make a difference. But, I mean, look, you kind of have to believe in the market, and at least the American markets long term, because if you don't, then what are you doing investing in the markets? My dogs are about to have a play fight, so if you hear some growling and barking, that's what it is. I mean, I'm about 75% liquid assets invested in the markets, and I am comfortable with that amount of exposure because I believe in the American stock markets, or specific American stocks. I believe in their long-term viability. If you don't believe in a company's viability, then you really shouldn't be doing more than, at best, day trading it. I mean, frankly, if I don't believe in a company's viability, forget about the stock for a second. If I don't believe, if I don't believe in a company's viability, I don't even want to day trade it. Rose, leave your sister alone. She just wants to cuddle with you or play with you. Just stop being a bitch. You're so spoiled. Rosie is a little bit too used to being the only child. Now she's the eldest child, and her sister constantly wants to play with her, and Rosie hates it. Yeah, I know. I'm talking about you. Yeah, you look good. I know. Be nice to your sister. Put her in her place, but be nice to her. Anyway, so yeah, I'm more than okay having 75% of my liquid asset net worth in the markets. I do have hard assets, but I honestly don't even really factor those in because, I mean, my apartment, I live in it. So even if, God forbid, I needed the money from it, I would have to move out and then sell it. So that's like a 100-step process. So I really don't factor hard assets into really anything. I mean, my sister and I inherited my dad's apartment, which, by the way, listed yesterday. So we'll see how that goes. I don't count that as, contributing to my net worth because it's a hard asset. It's not sold. Don't even have an offer on the table. So it's, I attribute calculating hard assets in your real viable net worth to be a mistake, unless it's a vacant lot that you could sell quick, fast, and in a hurry. Anyway, 75% invested in the market. If you are, look, it's going to be different for everyone, right? So a lot of people have different debts, debits, liabilities, and whatever. I don't. I'm extremely fortunate that my dad grew up in foster care with no money, and he made it a point that no one in his family would ever know what it would feel like to be broke as shit. So he worked really hard, created his own company, and my brother, sister, and I, and my niece and nephew, we have all benefited from my dad's many, many, many years of hard work. So I can put 75% of my liquid assets in the market and be more than fine with it. Not everyone is in that position. You should put as much or as little as you are comfortable putting in to the market, because it is at risk. I mean, all of the investment houses that, if you try to open up a brokerage account, they have a disclaimer at the bottom of the page. Investments are not insured by FDIC, whereas a bank account, a money market, checking, CDs, or whatever the case is, that is all at least aggregated. As long as you're under, is it 250? I think it's 250K in one investment or financial firm. 250, I think you are insured for. So if there's a, God forbid, a financial collapse, you are insured for up to $250,000, which is why it's retarded. It makes no sense. During the recession of 07, 08, 09, people were pulling cash out of their accounts, and zeroing out their accounts doesn't make sense because FDIC are still insured. Although I think the insured amount was only $150,000 back then, and by only I mean comparatively only. Anyway, so my price investments, 75% net worth. I'm comfortable with that. If you are not, that's fine. Put whatever you're comfortable into it if you're going to invest. It's not for everyone. The last week and really the last 6 months, if the last week or 6 months aren't evidence enough of how volatile the markets can be, and that's unsettling for you, then it might not be where you want to put your money. I'm not sure where else you're going to put your money, because you're not going to get dick shit in a certificate of deposit for the next at least 5 years, just like you haven't been able to get a good certificate of deposit since 2006. It's just not going to happen. The equity markets are really the only places for you to make money. You could try bonds. You're not going to make a whole lot of money there. Treasuries, not going to make a whole lot of money there. I do actually own some shares of a corporate bond ETF, VCIT. It's Vanguard Corporate Bonds. Gives me about 3% dividend. It's the only ETF I have or will ever own. It's the only bond exposure I will ever have, and it's really indirect at that because it's an ETF. So it's not like I'm owning bonds outright. That's just like a little bit of a hedge. It's probably the most boring holding I've ever had, ever. And a couple of my friends that I talk stocks with on a daily basis will tell you that I invest like an 80-year-old man. But I'm fine with that. I'm fine with slow and steady. I don't need these big swings. So the way I invest is when the market goes down, generally, if I'm down, which I'm not always, I am down far less than the broader market. But likewise, when the markets go up, generally, I am not up as much as the broader markets. It's steadier. I don't like lower lows and higher highs. I like slow and steady wins the race, because in today's world, in March, I mean, we haven't seen this kind of volatility since 07, 08. So, yeah.